Hello and welcome to iTradeAIMS.net, AIMS Stress-Free Trader. This is Imi, the Forex trader. It's a clear wave 3 down, waited for it. I was actually at breakfast because I knew it's going to take a bit of time, because when I saw earlier, let's go to the M5 chart, and I saw this breakdown and I thought, okay, we're going to wait for setup 1. And now we have that setup 1. So on first one, it was around here, the red dot, but the cross or zero line wasn't there. So you wait for this at least 1 bar and then across, and it looks like we are almost in. Let me just, this is the ATM, the appropriate name. It is an ATM. If you are disciplined enough and you trade properly, this can be your ATM where you can just cash in money. So this is Advanced Trade Manager by Snorm of for-exe.com. It is a really good and essential trade management software that you could get. Highly recommend it. Right, so a trade is in. It's a setup 1. This is DAX40. We have a 3. And then we have a 4, and the 4 is pretty good 4. It's not really a flat one. It is flattish, but it's not really a strong pullback as well. It's come back to the purple. I don't know what's with the purple, but it just comes to it and drops. If I was here, I probably would have taken the fruit here with half the risk and then invested the rest of it using the box. But now I'm gone 1% below the box, and if I want, ideally my stop loss mentally now while I'm here is here. If price starts to go back up above the gator here, I'm out, so that would be half a risk. Where would be my target point? You should know by now. It would be the target zone 1. So let's go to target zone 1. This is just a $250 risk trade, and we are aiming to make 500. I think around, yeah, 477 USD, around there. Yeah, risk. So that should be okay. It's about 40 pips profit. Now, I don't usually go for 40. I would have actually should have made, I mean, I just sat down and saw the setup 1. So I just quickly went, put the ATM on. 1% here on the swing. So if you have, while I'm at it, I'll actually talk about the ATM as well. So you have like 3 options of setting an order. So one's based on the bar, which is the candle length. The other one is swing. So that is if price is out of the box, then it's gonna calculate the low of the price where it is. So from price, and then the other side would be the box high. So some of the features of AIMS trading are inbuilt into it, because I remember this used to be just a set of 2 buttons that Steve coded on the request of, or probably he just loves coding, so I think it was one of the things, oh, what if we have this? And then Steve went on and made that simple simple trade manager. It was just a couple of buttons, and then he kept adding, and then it turned into this. So you have these 3 options here. This is another one, the third one, fixed points. So if you know what is your stop loss going to be, which in my case on M1 is usually, like if I was here, I would have 12 to 13 pip stop loss, and then obviously my target would be somewhere here. But I'll see how it goes. I'll see how it responds. Like DAX has this nature of creating suddenly a 10-15 points strong candle, and that's really what we're after. So if it does that, bang, and hits it, fine. Otherwise, if it kind of starts to slow down and stuff, I will take my profits. So I'm willing to actually bring my stop loss there, because that is, see that little hump here, pauses, and the gator line. So that's really good. 10 pip stop loss. All I want now is a 20 target point, and that I will do by dragging it. So I won't have like a 1% on this account. Yeah, I do keep 25k account for the M1. I wouldn't, I mean, I could do 50, but this is just what I'm comfortable with. I have kept 50 for some time. I think it doesn't fit well with my psyche. I'm pretty happy to lose 250 if it goes against me. But if it's 500, it's just, even if I make 1,000 when I win, but losing 500 is just not fun for me. So I stick to the 250. And this is the bit of the mental bit that everyone have to understand about themselves, and then try to figure out how to get out of those things. And sometimes if you're just comfortable with it, I mean, I'm not saying that you should always stick to being comfortable. You should always challenge yourself. But if you are too worried about messing up the routine, the sequence, then you just stick to that and don't challenge yourself until you sustain it for a long period of time, and then you want to challenge yourself. So that's what it is. I remember back in the days, one lot trade was my max. I just couldn't go above one lot, and it used to be on M1, so one lot was probably around, well, one lot is always around $100, but we used to take trades about 12 to 13 pips, and one lot kind of, that turns into like £100, and losing £100 was my max. I couldn't lose more than £100. That was when we started back in 2010-11, and it took a while to understand. So I stopped thinking about money, and I had to start thinking in percentages. While percentages is a great strategy to get you out of that, but then there will be a time when you get used to percentage wins and losses. You want to get back to the money bit of it, because then it gets really boring, and then when it becomes so boring that you start making mistakes, then you have to kind of bring that excitement back into it. So start thinking money wise. But obviously if you're a beginner and your problem is emotional trading, getting angry, getting frustrated, or the fact is that if you get elated, extremely excited when there's a winner, that actually suggests that when there's a loser, it's going to be similar amount of agony as well. So it's like when a trader begins, the mood, the air of their mood, it creates big, huge swings. So they are very spiky. Oh, so looking at the price, like I said, the AO, DAX has this habit of creating strong trends, strong candles all of a sudden. But anyway, when there's a trend, for example, the trend is down, obviously for that trend to sustain, the candles in the direction of the trend, this is a bear at the moment on the M1, so all the red candles are supposed to be bigger than the green candles, and there's supposed to be more red candles than the green candles. And this itself is a pretty good pre-warning. So like if you look at this, you have a red, green, green, red, red, which is very, very small candles, and then you have red, green, red, green, green, red. And now this one we have a candle, but I'm not too much scared of this one, because this is usually a reaction to the peak of 3, and at times wave 5 ends there to make it a truncated wave 5. Just hate that truncated thing. I never look for it, and I don't want truncated wave 5s. But what it would do sometimes is that it will either be a truncated one, or it would just bounce off and then wiggle around that area. It would obviously stop you out, and then it would go sideways, and then half an hour later it would drop. So it would eventually do that wave 5. It would hit that target zone 1, but therein lies the what shall I call it, well, the struggles of retail traders, that sometimes we have this, a pattern completes itself, but our trade management rules gets us out of the trade, and we are out and the market goes. So if you're looking and you're there, you probably can sometimes get back in, but other times you're not able to get back in. So the situation now, what's happening is that it's hit the peak of 3, so it's reacting to that. Obviously it's attracted some buyers around that area, and now we have a PC pattern. So we have the box high. As you can see, this was stepping up, so that was the, but it wasn't stepping up steep, it was the children's staircase, smaller ones. It's just going there, comes to the purple, and then starts to go down. So when it breaks here, it broke the sequence, and now we have a stepping down sequence. Usually you'll see a PC here, there will be like a spike, just like, you know, invert this, take this tail on the other end, so it comes like this and then comes back, probably create another box high there and it comes down, and that's a PC pattern. It's easy for me to stick around and wait because I've seen so many of these patterns. I am bored at this level of these things, so I don't really watch my chart the way I'm doing now, but I'm doing it simply because today I thought, okay, we have this nice setup one, let me just take a trade and start talking about it. In most cases, as soon as, you know, I put pending order, I would just, you know, start doing other stuff, browsing or reading something or doing all the stuff, or probably just even leave the screen because, you know, ATM is there. Because really the pattern we've seen so many times is just, I know that it's either going to hit the stop loss or it's going to go and hit the break-even point, bring the stop loss to break-even, which ATM would do automatically, and then if price pulls back from there, we probably get out break-even like what we did on AJ, and then probably goes and hits the target zone one, you know, target point, and that is the outcome that we like, especially because yesterday I had a couple of losers, and that's because it was the 30th of September. I think usually on the last day I'm not that aggressive. I shouldn't have traded, but it is what it is. Who cares? In the grand scheme of things, what you look for is, you don't go into ecstasy or euphoric state of euphoria or depression at the result of a single trade or the result of a day's profit or loss, or even at the end of a week or a month. That's not what trading is. Trading, there are 5 fundamental truths that we have learned from the late Mark Douglas in his amazing book Trading in the Zone. I have it printed, laminated, framed actually now. It's always in front of me on my desk, and it says, number 1, anything can happen. This is a mindset that you have to understand, that anything can happen. And from the market point of view, anything can happen, right? I can go up, it can go down, it can go sideways. That's basically the 3 anythings. There isn't more to it. In the market, you only have kind of 3 things: up, down, sideways. So that's the anything. So anything means market can go up, down, or sideways at any point. So like it's going up now. I have an exit signal. It's a black dot. If I want, if I'm too cautious, I can take my exit right now. I won't lose a penny. But I'm imagining, okay, I'm reinvesting that money. I'm thinking PC can happen. So I allow that. I've half my risk anyway. It's not 1% loss, it's just 0.5% loss, so that's fine. Although I have a second exit signal now, it looks like the market's kind of lost momentum. It's just kind of sideways. So I can exit if I wanted, but I still think there can be a 5 down, and then I might get out, and then it would start going down again. So on one side we have the black dot exit signal, on the other we have the red dot and the seed sell signal. This seed though is not of interest to me, because what I want a bear candle or a good strong move and pullback for hunt signals. And that's what it is. So what else? Yeah, so back to Mark Douglas. You don't need to know what is going to happen next in order to make money. This is an important point. A lot of the traders think that they have to be very good at predicting the market. So if you go back to point 1, anything can happen. That actually means that even if you try to know what is going to happen next in order to make money, you probably can't. You can, but you can only do it in a probabilistic manner, which was point 3, that there is a random distribution between wins and losses for any given set of variables that define an edge. So for any setup and any pattern that it repeats itself, there's a random distribution between wins and losses. What does that mean? What it means is that we know that in trading, nobody can get 100% wins. It's just a percentage. So even if you have a system of 90% win rate, you can still not tell if the next trade is going to be a winner or a loser. But most good strategies are around 50%, even way less than 50% win rates. And back to the market a bit. So the reason I stayed in there is that is the PC pattern I'm expecting could happen. So sometime there's a slight violation of the stepping up, and then it goes up and then starts to go down again, and then creates a new box, and then it hits it. So the trend is down. Let's go back to the M5. Looks like some impulsive move is going. It's happening. It's going up. So I'm willing to wait and take 0.5% loss. If you look at the M5, it's pretty much saying to me that you should have actually taken the cherry and taken some profits at the peak of 3. And I could exit now if I want. And I think I can do that. I just go to ATM and do this. And that's it. I'm out, and now it's time for DAX to drop a ton of bricks, but that's fine because I have a couple of signals. It's closed above the green line, it's closed above the box. I gave it a fair chance to give me let me just write something. Should I bring it here? Yeah, I can bring it here. Oh, what just happened? Okie dokie. Yeah, this is the chat room. So one of the members, yeah, I put my pending order in the chat room, and good, Peter got it as well. He's using the very, very old Gator, which has that no trade zone in between. All right, so that's a good setup one. He took it as well, and he's out. He's probably out before me. I'm going to make my comment. I tried to stay in to give it a chance to create PC pattern, but it seems like it's lost its will to create wave 5, which it might do later, but I'm out. Just -4 points. But it was a great looking setup one. And as I said, as soon as I'm out, it's going to start going down. This is going to be a PC pattern. So what I'm going to do now is I probably get that ready. And if there is still space, if you can see, if this is going to be my trade, it's going to be about 13 stop loss. And target zone is there. So yeah, it is worth taking, because if the trade's here, after the trigger, I can move my stop loss there, so I can target about 18 to 19 pips. And that will be it. So I'll put another pending order. And if the market breaks the high, of the box, ATM will automatically close the order, because stop loss will be hit. So I don't like these red and blue lines, so I then change it from swing to fixed points, and then I click on A, so all the buttons disappear. So this is my re-entry. Pretty boring trade, a good setup one, pretty boring. As I said, this is not considered a loss for me, but obviously it is a loss because it's -4. I was giving that chance. If I was too curious not to have a loss or to protect my profit and stuff, then obviously as soon as it came around here, I would have moved my stop loss to break even. But there you go. I think it's what we call the repeat setup one. So this now could be a 1-2 after wave 5 down. Like I said, you know, most of the time it comes around here, hits the peak of 3, goes back up, hits these level and drops, creates a PC. But in this occasion, on those couple of candles, it felt like the buyers were just pouring in. So I got out, because he even closed above these levels. See, these are the levels. This is the levels of wave 4 lows where it created it, and you can see price actually did bounce off those levels, and now it's going down. So there's no real momentum at the moment going on. I would be expecting this breakout to be strong, to go straight below this level. I would want it to break and go straight below this level, and then what I would want it to do is to come around here. If it doesn't go straight away, and then if it starts coming back, I would want it to actually bounce off it, even it can do a little bit of that, and then go straight down. If it doesn't do that, I'm out. So this is what we mean by when we say professional traders or good traders know exactly what they would do for what that could happen. So obviously it needs a bit of experience. So you need to know your patterns, you need to know how the market moves, and you would know that in the market there only are 3 things. It either goes up, down, or sideways. And then it's not a linear single digit thing. Up doesn't just mean up, it's kind of fuzzy logic. So sideways is like this bit is sideways, this is down. One could say this is up, but this is not up. Well, it is up, but it's relatively less steeper in angle. It's lower angle, whereas this is steeper. It's going down strongly, so that's down. This is sideways. Within sideways, you will have up and downs, but they won't really make much difference. So like this is a sideways, because if you look at it, the range of the up and down move is just 29. And this is a down wave because it's dropped from like 65 points, so that's down. And now, so it's broken, the trade is in, and it has not shown me what I want. So it might bounce off this and starts to go up again, in which case I will see what it does around this area again. Before that, I will see what it does around this area. So another box. Ideally, I could have my stop loss just there, this area here, because that's above the trigger candle. So I can have it here to make a statement to say, you know, if price comes back here, I'm not interested. What I'm interested in is price breaking strongly, breaking the lows of 3, and going straight to hit the target zone 1. And I'm going to bring my that's less than 500. It's just $300 profit, but that's all right. Let's we see. Let's we see. What is that? Anyway, so it's going for it. Yeah, it is strong enough. I can see. So as you can see, it's hitting the bottom of 3 or the peak of 3 levels, and it is meeting some buyers there. So wouldn't it be amazing if we had some volume information? But sadly we don't get that. Less headache, fine. Price is enough for us. So it's this is the time where I would like it to just crash down. And on M1, crash down is like it's nature. It should do that. If it doesn't do that, you're trading the wrong market at that time. So as we can see, it did not crash down. It's not going down. This is the third time it hitting that level. It is what the price action gurus would say, a third bottom is happening. So obviously it did not crash down because there aren't many sellers, not many sell orders there. It's kind of evening out. It went back up, hit those levels, and introduced some more sell orders. And yep, like I said, that is what we need around these levels. This is important to understand, that if these levels are there, and I'm talking about, whenever I say a level, I mean a box level. Why? Because a box level is a more grounded assessment. It is a fractal. It is a change of behavior, and it's happened because it's there. It's right in front of you. It's not just a random level that you have found somewhere. It's somewhere where price has reacted and turned around, and then reacted and turned around. So these levels do exist. Market does react to it, and if it does, then we can look into it, you know, can learn from it. Now this is just a game that I'm playing. Otherwise, if you just follow the rules, you had a red dot and a box, and then you follow your rules, and then again you have a sleeping gator, fresh cross of zero line, purple correct, you take a trade, wait for a 2-hour target to be hit, and that's it. So as we can see, I know I deleted those boxes. Bring one back. You can actually do Control Z to bring back something that you have deleted. Control Z again, just like any editing software. I don't think Control Y works on it. So delete him again so I can see the price. So it did not introduce really crazy sell orders there. It's just there, but what do I care now? I mean, I can have my legs on the table and just watch the game. The reason I'm talking about it and doing all this is that this is an automatic thing for me, so I don't even think about it, and I kind of go in and out of the market because, you know, it's like akin to driving. When you first learn to drive, or if you've been driving for years and years and you try to teach your daughter or your son or somebody how to drive, then you find out, oh my God, there are so many things that one has to do to learn to drive. And so when I teach, like I'm doing now, there are so many things that I'm talking about, but in real time when I'm trading, it just happens on its own, and I don't have to think about it. So it's break even, and price is going towards my break even stop loss. This will be my last trade. It's already half an hour past my trading time, but sometimes I enjoy making a video like this. And although whenever I make a video, it's either a losing trade or a break even, and problem with that is that beginner traders, when they look at it, they don't really get impressed. What they want is big, huge winners. That's what impresses them. So sometimes I just record them and then don't even release them. I will release this one. I don't care. This is I think it's a well-managed trade, the first one and the second one as well. And I think I have read the situation pretty nicely. So I got out because I thought that market went into the territory where I didn't want price to go around this area. And then it created that setup again. It came down PC, and so maybe this is the wave 5. You see, maybe this is where wave 5 was supposed to end, and it's ending. So be it. Maybe wave 3 started from here, and if it started from there, then maybe this is just the target zone. Okay, so yeah, something's happening. Price is releasing itself from the grips of the wave 3 bottom, and now it's released. That's gone. All we have to do now is to do nothing and probably cash in this $300 profit. It's already break even. Do I have to make myself sound more excited? Thousands of trades later, one becomes numb to it. I mean, when I used to be really excited and angry about these things, I always wanted to get to this state or stage in my life where I am not bothered. And now that I'm there, I'm bored. I feel like those were better times. Although they were painful at times, but you know, the AO of my emotions was really wild. It was peaking red and peaking green, but now it kind of just goes and stays around the zero line. I have spoken for about half an hour straight, so I'm going to just mute myself. And wave 5s are wave 5s. They're different type of wave 5s. This one happened to do its PC somewhere down there. So this PC pattern that I'm talking about, this one, it could be that this is 3, 4, 5 of this wave. So if we put a target zone study on this, then we already are in target zone for this tiny wave. So sometimes when I do this kind of analysis and market's not moving pretty well, I just take my profits, 12, 13 pips. But the lot size is not that big, so it's just about $200 profit at the moment, and I've paid 50 loss already for catching this wave 5, so it's not really worth it. So I'd rather take either the target point or break even. Just gotta go with you know, what the market tells us. At the moment there is, let's just delete this, they are getting on my nerves now. And I need to remove this. We don't need ATM at the moment. I'm just removing it just because I don't like these extra lines and stuff. I already think that my chart is pretty busy. I'd love to have this system introduced, but it creates a lot of trouble for a lot of beginners, so then I don't do it. Otherwise, this is what I like. let's have hunt set up. So yeah, this is the target point. So as you can see, price is going down pretty parallel to the gator. There's no reason to exit. Just wait for the target point to be hit. So we'll exit here because it's going back up like crazy. So this is our trade now. We made 8 pips and we lost 4 on this. So I would call this wave 5 as break even now, because I made about $82 from these 2 trades. So this is a break even trade or slight winner, and this is how we trade setup 1 into wave 5. As you can see, the box was big here, but the technique that I used was to have my stop loss at a different location, and so it was pretty nicely going down, but then it reacted and went up, so I just got out. I mean, it was just 2-3 points from my target point, and then I wouldn't want it to just go back up. So I recovered my $47 loss and made $133 on this trade. So it's $82 profit, which is kind of like break even. So that's it. I hope you learned something. See you later.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.